Hey, what's up, my beautiful people? I hope everybody's doing good today. You already know it's your boy Devo. You already know it's your boy Devo coming back with another trade recap on the day. You know what I'm saying? You know we're gonna show up, even though we had another loss today. You know we're gonna show up as usual. Like I said, ain't no cap in the rap. Let me pull up the live, make sure everything's working. Stick with me. I'm trying to make sure everything's working right now. Okay. So today I have a lot of things to show y'all. Well, not too much, but I do have something very important to show y'all and something I got caught up in. And I want to show y'all this so y'all do not get caught up in the same setup I did get caught up in. And honestly, like I said, it's all a learning experience. So you might get caught up in it, but also if you do get caught up in it, you can think about it and be like, oh, okay, I can see why this happened. Your boy Devo, so motivational, told me about this. So what I want to talk to y'all today about is accumulation, manipulation, distribution. That is a very key thing in these markets. Remember, accumulation, manipulation, and then distribution. Okay. So I'm gonna draw this out on my whiteboard and I will show you guys what I'm talking about. Okay. We okay. Let's switch it. Okay. Stay with me. I'm drawing this out for you boys. Okay. Distribution. We're gonna have distribution. Stay with me, boys. Trying to draw this out kind of quick. Gonna come together. That's our Stay with me, boys. It's correct. Gotta erase all this. So today we're gonna go over our recap. We lost another $150, which we are not proud about it, but it's all learning experience. You know what I'm saying? What can you do about it? But take it on the chin. Take that punch on the chin. Learn from it. Move on. Learn from it. Move on and get better. Because what are you gonna do? Are you just gonna quit? Are you gonna quit? Are you gonna give up? You're gonna go back to your job and you're just gonna keep saving up money? No. We're gonna learn from this. We're gonna get better at it, and we're gonna show back up tomorrow. I'm gonna get back. I'm gonna get onto that subject. I might not be trading with real money tomorrow because I'm down more than I would want to. I'm actually down too much money this week, and that is on me from not following my disciplines. Today I did follow my disciplines. I followed my strategy, and I'm not too mad about how I lost. I'm just mad that I did lose because of my big loss yesterday. I feel like honestly, today wasn't even a bad day really because I followed my strategy to the T. I was patient. I was disciplined. Got in a good strategy, but trade didn't work out. You know what I'm saying? And that's all you can do is follow your strategy, and hopefully that trade will work out. You know what I'm saying? And so let me draw this out for you. Stay with me. I'm drawing this out for y'all. Brother Drew, what's up, brother? Okay. No, not live trade. The market's closed. This is a recap of my trades. Okay, so I want to show y'all this. And I wish I could have it better, show y'all it better with just the actual camera, but I don't have an actual camera, so this is how I got to show it to y'all right now. Okay, so let me get right here. So where I can show this like this. Let me get good light. Sorry about that. Okay, so what do we have? First, we're going to start off with a trend. First, we start off with a trend, right? And then we're going to have our accumulation, which is a range, right? They're accumulating orders. Then we're going to have our manipulation. It's going to have a breakup sweeping this range. We're going to have a breakup sweeping all this, because what is up here? Liquidity. Why is it liquidity? Remember what we talked about yesterday. Liquidity is stop losses or your orders. These are stop losses. So I have buyers up, I have sellers up here pushing price down, right? I have sellers up here pushing price down. And then we have buyers down here that are pushing price up, right? So what is down here? Also liquidity, also stop losses from the buyers, right? So what we have is we'll have a manipulation sweeping all them. Then we have the distribution. What is distribution? Distribution is the sell-off phase. So you have this sell-off sweeping all this and actually going to the move that they want to go. You see what I'm saying? And what price can also do, what price can do from this distribution phase, it could be distributing, it could be collecting these orders, manipulating, sweeping these sellers up here, breaking down, but not actually wanting to erase this trend. It would actually want to tap this fair value gap. I've taught you about the fair value gaps, or it's going to want to tap your order block, okay? So it can either distribute down to tap that fair value gap and order block to actually end up continuing the trend. Are y'all staying with me? Or we can see price distribute and actually sell off and create a new trend, making this a change of character. If we broke, once we break right here, our last lower high, our last higher low, that would be a change of character, right? Okay. So now that I hope y'all got that. You know what I'm saying? So let me bring it back up again. I really want y'all to get this. So we'll have a move, right? We'll have a trend. And so in this example, we have an uptrend. W, appreciate you, brother. Appreciate it a lot, for real. What's it called? So we'll have our trend, right? We'll have up. So in this example, we have our uptrend. So we're breaking up, creating our trend. Then we have our accumulation, right? Our accumulation. Then we have our breakout. And then also, what is on this? What is on this manipulation? You're also having all types of buyer orders that are FOMOing in. What is FOMO? Fear of missing out. They're trend chasing. So also, whenever it's going up, you have all these buyers coming in because it broke out of this range. Whenever you break out of a range, what does that mean? Usually price wants to go that way, right? But in this case, you'll have price break out of that range, selling off, sweeping all of this, sweeping all of that, and you can either react off of this trend that's already started. You can either react off of the trend and break up, like I said, or we can have a change of character and breaking down. So I hope y'all get that. So now I'm gonna bring y'all into my trade that happened today. And so I showed y'all that very important model because that is actually what happened in the market today. That is actually where I got caught up in, thinking that we were going to have the market structure shift, but no, we distributed down only to get to a fair value gap of our actual uptrend, breaking back up, creating new highs and new lows. Okay. And so that's where you really can't be mad at. Okay, let me show y'all. Green. Y'all with me? Okay. Let me pull everything up on my phone real quick. Okay. Okay, stay with me. Okay. So to open the day, what did I tell y'all I was yesterday? Honestly, I don't remember what I said what my bias was yesterday. I think I said I was actually bullish. Oh yeah, I said I was bullish to test these resistance, right? And what did price do? See, these are my resistance lines. I'm gonna show y'all real quick why I have those resistance lines there. I know I went over it yesterday, but I just want to refresh because we might have new viewers in here, or just in case y'all didn't catch it, or just in case if I didn't go over it. I'm not gonna say that, I'm pretty sure I went over it, but I'll go over it again just to make sure. Okay, so why do I have this 565? Because this is where the top of our candle that broke structure. Okay, then we also have price getting wicks right here, giving a strong wick down. We see price defending this area, right? So we have this 565 area of resistance. Then we also have this another heavy area of resistance right here, which is at our 570. Why is that a heavy one? Because look, we see these wicks. What are these wicks? The top of these buyer wicks. What are these? That means that is selling pressure. Okay. So what do we see? We see one wick that tapped this. We see one wick that tapped 570, right? Gave a strong drop. Then this next candle, it couldn't even break all the way up to there. It got dropped by my 565 resistance, right? The next candle over, what happened? Hit the 570, got dropped all the way back down, right? What happened to the next candle? It tried to tap it again, and it broke even farther back down, right? And yes, we did have our higher highs and higher lows that broke out of it, right? We capped up and broke out of it. And that's I went over that a couple days earlier in my trade, that I actually thought price was creating higher highs and higher lows, and I got caught up in one of the moves, and we ended up having this heavy sell off, creating another break of these higher highs, higher lows, coming down to this area of support, right? So as we can see, I have these support lines right here because this is where price is defending. So I have one support right here at 552 because we can see one wick, two wick, we can see three wick that defended it, one broke under it. So I have another support right here at 549, but then we see this wick right here that got defended by this 552. So you see what I'm saying? That's why I have my support and resistance, because that's where buyers and sellers are defending. You know what I'm saying? That's where when price drops down right here, my buyers are buying it back up. You know what I'm saying? When price comes up here, my sellers are selling it back down. See what I'm saying? Okay, so let me show y'all why I showed y'all my accumulation, manipulation, and distribution model, because this is exactly what happened today. Okay. Okay. So to start off, I'm going to show y'all exactly where I got in. I'm going to show y'all exactly where I got stopped out. I'm going to show y'all why I feel like price went the way it did and why I was on the wrong side of the trade. You know what I'm saying? I want to show you all this. Okay, so price opened up at 557, leaving this little gap right here, which not too important, but what do we do in gappers? What do we do to gappers? We fill them, right? Okay, so we had a range. What are ranges? What is a range? Ranges are Stay with me. What are ranges? I'm going to keep this model right here because this model is very important. But I want y'all to read the bottom of this board. Equal highs. Equal. Oh yeah, my bad, but I didn't see it. Yeah, this is stocks. Yeah, the meme coins. Yeah, but this isn't crypto. I don't trade crypto. I just invest in it. I invest in crypto, but I don't trade crypto. Yeah, this is stocks. Okay. So what are ranges? Ranges are equal highs and equal lows. Okay. No trend, because if and range is equal highs and equal lows, that means that is this: equal highs, equal lows, equal highs, equal lows. Not because what is the uptrend? Higher highs, higher lows, higher highs. So uptrend is higher highs, higher lows. So we have an HH, HL, right? Okay, actually, let me erase all of this so I can give you a clear picture. If we're still confused about this accumulation manipulation, I will draw it back out. But real quick, I need this whiteboard to show y'all. Nah, for real. Okay, so equal. So what is an uptrend? An uptrend creates higher highs and higher lows. Higher highs, higher lows. Higher high, higher lows. That's how you know you're in an uptrend, right? Stay with me now. So we have higher highs and higher lows, right? God dang it. God dang it. Markers everywhere. Okay. Now what is a downtrend? Okay. So we'll have lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. God dang it. I keep getting mixed up on these freaking markers. Okay. So how do we know we have a downtrend? Because we have a lower high. So we have a high, right? We go low, but we don't actually know that's a downtrend yet. We just have a high and low, right? So we have a high and low, but then we come up. Okay, I didn't mark out this one. But then we come up. This one's actually supposed to be right here. We don't know we have the trend till it actually starts breaking down or breaking up, right? So we have one swing, we have a low, So now we have the low. We want to see if it's going to create a lower low, or we want to see if that's our lower high to create a higher high, okay? But what do we have? The swing, and then we created a low high. What do? We drop down, breaking structure, creating a lower low, retrace back up, as price always does, give us our retracement, giving us our lower high. Breaking back down, giving us another lower low, retracing, giving us our lower high, breaking down, giving us another lower low. So y'all get that, right? Stay with me. I got a good drawn out model right here for y'all. And I hope anyone could learn from this lesson. You know what I'm saying? I hope this lesson can be valuable to everyone. And trust me, if you are trading, trust me, if you are trading, you will see these models. Don't think I'm just talking just to talk. I'm telling you, if you're in the markets, brother Drew, if you're in the stock market or if you're in the crypto market, even if you on meme coins, you will see higher highs and higher lows on meme coins. Price is fractal and the market is the market. If you can trade the stock market, you can trade the crypto market. You get what I'm saying? Higher highs and higher lows, and all models are going to be on every time frame because price is fractal, and it's also going to be on every market. So if you can master the psychology of the market, if you can master the psychology of the market, if you can master the psychology of stocks, it translates to crypto. If you can master the psychology of, it's not even the psychology of stocks, it's the psychology of trading, the psychology of the market in general. Because whatever you see on stocks, you're going to see on crypto. Whatever you see on crypto, you're going to see on futures. Whatever you see on futures, you're going to see on different indices. Okay, the market is the market. You're going to see higher highs, higher lows. You're going to see your accumulation, manipulation, distribution on any and every market. You get what I'm saying? Okay. Now let me show y'all this. So yes, brother Drew, you're on the meme coins, right? Well, you can look on your meme coin chart, and to see if it's going to go up or down, you can be trying to look for your higher highs, higher lows, and stuff like that. But also, crypto is a little crazy, right? Well, the market in general is a little crazy right now. So I mean, I don't know about the meme coins, man. Things are dangerous. You a brave man. Okay, so what is our range? Equal highs, equal lows. So we have buyers down here that are buying price up. We have sellers up here that are knocking it back down. And so basically, it's an even price. Even price. I'm saying, I got these apples for $1. I'll pay this $1. You know what I'm saying? There's no increasing demand for it, because if we have a increasing demand for something, price will go up, right? But there's not increasing demand, but there's not little buyers. I'm trying to figure out how to say it. The supply and demand is the same. There's not people saying, I don't want this price, I don't want it at this price, I don't. Because think of it, how do I get lower highs and lower lows? Somebody's saying, I don't want it at that price. I don't want it at that price. No, I'm good. I don't want it. But if there's only 3 apples, right? If America came out and said apples are scarce, what is the price going to do? And say that we're only going to have apples for 5 more years, and after these 5 years, there's no more apples in the world. What are they going to do? We're going to see a pack of apples from $5. We might see a pack of apples to $20. Why? Because the demand and the supply has come down. Because what is the supply? The amount of product is going to go down, but the demand is going to go up because they know the supply is down. You see what I'm saying? So equal highs and equal lows means supply and demand is equal. You get what I'm saying? When we see price going up, that means people are paying more and paying more and paying more and paying more for it. You see what I'm saying? They're saying it's going up, it comes down, it doesn't come all the way back down to that low. They're saying, oh, I'll take it at this price. It jumps up and gives a retracement. It doesn't come back down to that last price. It comes only down to here. People say, oh, I still want it. It shoots all the way up, and when it retraces, it doesn't come back down to the last swing. It gets down a little bit less. It gets down a little bit more. People say, oh, I want it. And then that's where you get another higher high. You see what I'm saying? So equal highs and equal lows is what a range is. And so if we have equal highs and equal lows and we don't have a trend, we don't trade, right? Because no trend, no trade. We want to be on the trend. Why do we want to be on the trend? How do we make money? We make money when the market moves. Well, what is a range? The range is equal highs, equal lows. The market is not moving. You're moving sideways. That means, I already explained it. The market moving sideways. It's equal sellers, equal buyers. You see what I'm saying? So we should look for a downtrend, then buy at a low high. Yes, sir. That's exactly what it is. That's exactly what it is. Whenever you see a downtrend, you want to see a retracement, and at that lower high, you want to sell. Well, no, you want to sell it at that lower high. You want to sell it at that lower high because price is going to what? It's going to come down. It's going to create that lower high, but it's going to drop back down. So you don't want to, when it sells and come up, you don't want to buy it because it's going to drop down. It's whenever you're buying, you want price to go up, right? So whenever you're right here at that lower high, it's going to drop back down to create a lower low. So if you're in for a buy, price is going to go against you and stop you out. You see what I'm saying? So whenever I'm at my lower high, whenever I see my trend, when I see my trend and I'm at my lower high, and remember my fair value gap, and I have a fair value gap, whenever I have my trend and I have my fair value gap right here, let me put it in black so you can see it. And I get my fair value gap right there. What is that? I'm in right there for the sell so I can catch this move. And ultimately, that's where my take profits will be. My take profits will always be after my lower high. My take profits will always be after my lower low or my higher high. So your next swing, you would want to be your take profit. Tell me if you got that. Because I know, I'm not sure if you've traded options in the stock, but so a put, whenever you go in for a put, you're betting on the market to go down. Whenever you're buying a call, you're betting on the market to go up. You see what I'm saying? I appreciate you, brother. That's what I'm trying to do. That's exactly what I'm trying to do. So on your puts, if you see the market going down, you want to buy a put. Where do you want to buy your put at? At your lower high. Exactly how you already know. Why do I want to buy it at my lower high? Because my lower high is my retracement, and you want to follow the move to create a lower low. Why do we get in at that retracement? Because how do we make money? We make money by having a product and selling it for more than we paid for. You see what I'm saying? So I'm gonna erase this trend. And I'm gonna erase these higher highs and higher lows. So you can see what I'm saying. So when price is going down, right? Say down here, I have a put option for $200. Down here, when price gets down here, the cost of that put option is $200. Are you following me? Whenever I come down, the price of my put, if I wanted to buy that put right down here, it would be $200, right? When price moves up, since it's a put, you're betting on the market to go down, right? Well, price is going up. So what does that do? That makes your put lose money. So that's how you lose money in an option. Your put will lose money. So up here on this retracement, your put will be $150 to buy it, right? Because it's not all the way down here no more. It's up here. It done retrace. So it's cheaper now. So that's why you want to get in at these lower highs and lower lows, or these higher highs, higher lows, because what am I doing? Okay, I got my retracement. Boom, I bought that contract for $150. Where's my take profits? What are take profits? Where you want to sell your contract. It's different, but like I'm saying, everything is the same. But what I do in stocks is I trade options. So in meme coins, you don't trade options for meme coins. You see what I'm saying? So in meme coins and stuff, you can see your higher low, and you'll basically put in as much money as you want at that higher high, higher low, and then write it down. You know what I'm saying, for your percentage gain. Well, options, you're doing the same thing, but you're not buying the actual shares. You're buying an option, basically betting on the price to go up or down. You see what I'm saying? So stay with me. What is my take profit? I take profits where I sell my option. Can you get rugged in stocks? No, you don't get rugged in stocks. Stocks is way different than meme coins are definitely you'll get rug pulled. Crypto is way more volatile than stocks. Stocks are more secure than crypto. That's why whenever you stay with me. That's why in right now how stocks are falling, how all the uncertainty in the market. Let me show you this. Look, stay with me, Drew. Remember this. Crypto is going to follow the market, okay? If we see the stock market dropping, the crypto market is going to drop. Sorry, I think I had a black screen. Yeah, I'm sorry about that. Man, I'm sorry about that. I know I had a black screen. Okay, so stay with me. Crypto is gonna always be more volatile than stocks. Why? Because stocks are more of a security. We have had stocks. The stock market opened up in 1792. That is when the New York Stock Exchange was put into place. So stocks are more secure than crypto. Crypto, I believe, just came out in 2012, if I'm not mistaken, or probably a little bit before that. But I think Bitcoin came out in 2012. Okay. So crypto is more of a risk on asset than stocks. You see what I'm saying? So if I see if the stock market is falling, if investors are taking their money out of the stock market, which is more of a security, you're going to see crypto drop even further because it's more of a risk on asset. But just how crypto flies up hundreds of percents, stock doesn't fly up hundreds of percents. You know what I'm saying? But that's why people love and hate crypto, because it's volatile and you can lose just as much money as you can gain just as fast. You see what I'm saying? So stay with me. But don't get me wrong, I do love some crypto. Okay. And brother, I already know you make your 100K. I already know you. I already know it. When my brother say he gonna do something, he don't cap. And I'm already knowing. And we all gonna make this 100K. Trust and believe. And not just 100K, we gonna be making millions. Believe it. Okay, so what did we see? We see this big sell-off, right? We seen price actually drop from our all-time high from 612 to 550. I believe that is correction range. We had a correction in the market. What is a correction? A correction is 10% or more down from your all-time highs. Okay, so I can pull this up and exactly what I said. So this, what I just pulled up, it's giving our percentage from our all-time high down to the low of right now. And that is exactly negative 10.36% down. So that is in correction range. Anything from 10 to 15 up to 19% is a correction range. Okay, so we can go back in, I'm pretty sure we can go back to 2020 during the pandemic. We can go back to 2020 during the pandemic and see this big, you see how big that stay with me, people. So you see how right now, you see this don't look like nothing. But in the daily time frame, it looks like so much more, so much. It is a lot. Don't get it wrong. That's 10% down. But I'm just trying to show you how the difference between a crash, which 2020 we had a major crash. Look at that. Oh my goodness. Look at that. From our all-time highs in 2020 down 26%. Oh my goodness. That is insane. That is a crash. But just as fast as the crash comes, that's as fast as the pump comes. Keep in mind. So, Drew, I know you're an investor. You're an investor in crypto, and I'm pretty sure you're an investor in stocks, right? What do we want to do? We want to buy price at our lows. We want to buy price at a low. We want to buy an asset at a low and sell it for a higher price, because that's how we make money through the profits. So that's why you always want to buy on these big red days and these big crashes and these big corrections, because ultimately, what are you going to see? You are going to see price come back up. Trust me, we have this big sell off right now, but it doesn't last forever. The market always bounces back, okay? Just like in 2020 during pandemic, we thought the market was done, right? No, it rebounded to new highs and actually it shot up. It shot up so fast you you can't even believe it. You know what I'm saying? What do we have in 2008? That is what I think that was the dot com crash. Let me search. I'm sorry. 2008. The Great Depression was 2008. Sorry about that. Yeah, the Great Depression. So even in the Great Depression, you see how price dropped from 150 down all the way to 67, 153 to 167 ruler on our percentage tracker, 7%. But ultimately, you want to buy at those bottoms because price is gonna come back up, especially in the stock market. Especially in the stock market. See, crypto crypto is more volatile to, yes, yes, stocks are less of a risk. So crypto on the red days, you can't be too certain because it's more of a risk on. Just like how you'll have a rug pull, and what if you put what I'm saying? Oh man, I'm lagging all over the place. Man, what's going on? Sorry about that. I'm lagging all over the place right now. Let me refresh the screen. Come on. Sorry about that, boys. Trust me, everything is gonna get better. Trust me. Every single thing is gonna get better. My quality